Hello and welcome to Behind the Markets 2023. February 23, 2023. I'm your host, Munyumba Mutwale, and welcome to Money FM, where I'll be taking you through the market outlook for today, the market landscape, and we'll be discussing our Enterprise Thursday conversation with our hot topic as well today. So jumping into the news right now, some of the main things we're going to be seeing on the markets today is firstly, we're looking at the FX rate movements, which are still continuously moving towards the negative. We still have seen Zambia on its worst or its second worst ever loss of value of the kwacha, which is currently down for 98 days consecutively and down 0.19%. It appears the kwacha continues to have its worst run. Year to date, from the beginning of January, so basically the bulk of these 2 months, we're down 8.46%. In terms of the value of the kwacha. And over the year, obviously, over the last couple of months, we've seen it down even as low as 13%. So it has been a tough period for the Zambian kwacha. And year to date, as I said, this is one of the worst runs that we're seeing. In terms of the signals on the market, we are still seeing the dollars relatively strong. It's still buying strong. It's still in the short term and the long term. While its directionality may be heading towards sideways, it is still very much building in positive momentum for the dollar. So there hasn't been much in terms of the outturn of any of the new strategies that have come in by the BOZ to try and change the trajectory of it. And this is why I think we spoke last time about trying to make sure that they maybe implement some alternative methods of currency management and diversification of markets that we can rely on in the currency spectrum. Now, when you're looking at things for the Rand itself, you have actually seen that's a bit more flat. The Rand is only up 0.76% year to date. Now, remember, South Africa is our number one import destination or import source. And we're only up 0.76% in terms of against the Rand. So relatively, we haven't seen the currency effects of any potential Rand inflation, while there's about 8.4% currency effects on any dollar-based imports. So we do see that the Rand is still closed about 1.076 on the interbank rate, up 0.22% after a few days of negative trading. On the week, though, the Rand is up 0.42%, but against the dollar, which on the week is up 1%, shows you that's a much more stronger trade. And the Rand has been moving side to side network. Now, if you want to take a look at the previous previous track record, the US dollar kwacha, that has been moving negatively for at least 30 out of the last 30 days, while the Rand has only been moving positively. Sorry, as the Rand kwacha, we've only seen the kwacha losing value against the Rand only 12 out of the last 30 days. So you can see that there is quite a bit more of a softer outlook. So Zambian traders and business people probably have to look to try and do more business with South Africa in the interim. Now, going into our bond markets, we did also see that bonds yesterday on the secondary market moved about 0.1%. They moved close to about 0.1% upwards in terms of the secondary tradable bonds, not exactly the hold to maturity bonds. This just gives us a look on what the market is looking like altogether. And we're seeing that in USD, the secondary bond index is down 0.1%. So one is up 0.1%. The bond index is down 0.1. Year to date, bond index is up 4.61% versus the US dollar one, which is down 3.37%. And all of this is driven by the fact that the US dollar is up 8.46%, showing the weakness of the currencies playing quite a strong role against this. And we've seen that interest rates did duck down yesterday to about 23.49, and they've continued to hold that line of about 23.49 year to date. Interest rates are actually down 0.15, signaling that there is potential buying happening on the secondary market. But unfortunately, on the primary market, we are seeing quite a bit of selling. So it seems as though we're seeing either quite a bit of selling or weak output. So either way, there is some sort of buying which is pushing funds up. Unfortunately, that probably just banks either buying or individuals buying from the secondary market, but it's not reflecting yet in huge amounts of bonds being bought onto the primary sector and the government being able to raise capital cheap. Remember that the interest rates are determined by the government's ability to raise money cheaply. Bank interest rates and business interest rates are determined by that. That's why you're seeing only short-term loan rates are starting to come down. But even that is being short-lived. It appears inflation is a little bit sticky for the moment. Now, taking a look also at some data on the commodities market. Yesterday, we saw copper drop about 0.57%, with oil drop 2.98%, and gold, also in dollars, drop for 0.41%. Now, all of this has been driven by the recent push, or by the recent fear that the Federal Reserve is going to start pushing interest rates up, and this is mainly because of sticky inflation that we're starting to see across global economies, and it looks as though though a lot of central banks will probably start taking a lot more strong action against inflation, or continue to take strong action. And some even fear that the Central Bank of the USA might even push interest rates all the way up to 6% in terms of the Fed funds rate. Now, that has moved that copper is not only up 9.13%, which does affect how much our copper mining companies will probably try and push out an output. They're already a bit sensitive to the price and a bit sensitive to the global situation, and we'll touch on some of the major stories heading out in the economy. But we're seeing that copper on the week is up 2.5%, up 9.13% year to date, but down on the month 2.1%. Now, if you take a look at oil has taken more of the beating, down 2.98%, year to date down 6.28%, and in terms of in dollars. But for the OMC companies who are actually relying on this, companies like Puma Energy, for example, remember that it's the weakness of the currency that's working the other way around that's been pushing the oil price upwards. And now, currently, what we are looking at is we're expecting a pump price of anywhere about 28.11, which means 89, where we had it on 92, and where with a 3.2% expected price rise. So anywhere within a margin, within a decent margin, we are expecting pump prices to come up to about 3%, come up by about 3%. Now, what I want everyone to try and pay attention to when it comes to when it comes to the oil price and the oil market, is that a lot of this is being pushed by the weakness of our currency. Now, the outlook on this is not looking strong, also because Russia is still looking to cut barrel production by 500,000 barrels, while at the same time, this is kind of the soft spot for the Saudis, so they're not going to let it drop any further. So the continued weakness of our currency is probably what's going to continue to slide down. Now, we have seen that there are supply chain changes that are being proposed. One is that the blending of fuel by Ndeni to try and blend ethanol with finished products is apparently to start in about 3 months, but that's going to be a policy. It's going to have to wait at least 3 months before anyone starts to bear any fruit from it. Then we also got the cleaning of the pipe that's happening to try and get diesel through. That's also another problematic area, or another area we probably have to wait for to see any impact at all. So these two areas are going to be the potential supply chain factors. The FX factors, no matter what, the central bank is trying to raise interest rates, pull back the statutory reserve ratio, but still, that is still proving to be quite difficult for them to try and get changed. So unfortunately, this is a battle till the end in terms of what's going to actually win out. Now, the problem that means is, one, inflation is probably going to continue to move up due to transportation costs, and I say it again. But the opportunity is that with prices potentially going up, probably companies like Puma, who are oil marketing companies, are probably going to experience higher revenues again. So whenever you see prices moving up on this level without the actual US dollar price changing, you probably will find that these bigger OMCs have probably bought quite a lot of stock, and their inventory is going to become rather profitable. The inventory that they purchased probably at a cheaper price is probably going to become more profitable. So as a result, you'll probably see that they will have much stronger earnings somewhere in the first half of the year reflected. Sorry about that interruption. But yes, you will see that these OMCs will have quite a lot more stronger earnings reflected. Now, coming into gold as a market, we have seen that about 1,836 US dollars in terms of the gold market. will be the price. We saw what the price holding down in terms of the gold market, about $1,833.6, down 0.4% from yesterday. And we've actually seen about 0.46% down for the week, while gold is only up 0.41%. So all the gains from gold are down from where they were. Now, looking in Kwacha in terms of where we have what were called wealth insurance assets, be it gold, cryptocurrency, dollars. So on the market, we're seeing that dollar is up 8.4%, while we're seeing gold up 8.9% against the Kwacha, in Kwacha's year to date. Now, yesterday it was down 0.2%. And Bitcoin was down 3.36% yesterday, with Ethereum down 3.42%. And we're seeing year to date Bitcoin is up 55.24% in Kwacha, with Ethereum up 46. Now, I always have to warn people that when you're doing wealth insurance assets, these are assets that are meant to offset broad-based market downturns. So, and I repeat again, broad-based market downturns. That's what we're really trying to see what can be done against that. Now, yesterday we did see also the stock market move up about 0.05% due to the fact that Copperbelt Energy Corporation Zambia did move up by 0.27%. Remember, that is the biggest company on the stock market. And year to date, we're starting to see shares up down 1.04% due to some early part sell-off as we're waiting for results to start coming in. The market inched up 0.05%. On the week, it's up 0.27%. On the month, it's up 0.39%. But year to date, it's still down 1.04%, mainly due to the fact that January was a very weak month where there was quite a little bit of sell-off, and we almost lost about 2% the value of our market. So it appears that any gains right now have just been simply to offset that. And it was a bit of take profit from the market players that actually drove that activity. Now, as I said, moving into the wealth, as I said, the wealth insurance space, those are the main characteristics that we're looking at in terms of sales and trade data. Now, obviously, best performing assets throughout the year, we're still seeing the stock market down 1.04%, and the rest of the markets, if we're looking at year to date, what have been the key performers? Obviously, it's still your crypto markets, your dollars. Your main performing assets is still Bitcoin, Ethereum. Gold and dollars are both up in the 8%, and that's mainly because the US dollar affects gold is barely moved up. It's lost all of its gains. So it was half the gains of gold and half the gains of the dollar, but unfortunately, gold has been wiped out by some potential continuous rate hikes by the Fed, with bonds up 4.16% and the stock market that is down 1.04%. So it appears the wealth insurance part of one's portfolio is actually grading strong, meaning that the market is in a defensive position right now. The market's currently in a defensive position. Now, going a little bit further now into where we are in terms of main stories for the market. Now, the main stories which I was looking at yesterday the president did receive a visit from the British embassy and also 8 different British investors who are looking to try and invest in the Zambian green agenda now in terms of green energy and green electricity. So we did receive pledges again, or the cementing of original pledges worth $2 billion to try and invest in the Zambian electricity sector. Now, that's obviously to try and that is now. I always have to say this, people. From an investment pledge to the materialization of a power station, that takes years. It doesn't mean these people tomorrow are going to come, put in electricity, and things are going to change instantly. But there is a drive towards trying to bring a lasting solution in this power game. And I've always said that part of the investment that should also be done should be in creating low-cost solar fittings for households, because the domestic sector is still the biggest threat to the energy the energy sufficiency of the country. I think even the president's special advisor actually came in and said the country still wants to be energy plus. No matter how much we may have reined in load shedding now, the country still wants to be in an energy plus situation. But however, that is always going to be short-lived if you have a strong growing domestic sector, which is responsible for 68% of grid demand. And that is because every time a couple gets married, every time a child is born, that is more electricity demand that is coming into this country. Okay, that is actually sitting on it. So, in as much as we can get $2 billion worth of UK investment, another $2 billion worth of Saudi investment together, which will probably throughout the next couple of years materialize, yes, into another 2-3 gigawatts. Into another 2-3 gigawatts of electricity, or probably over the next decade, especially in the solar space and in green energy. No matter how much we get that, even though I think some of that should be going towards finishing Batoka Gorge, but even though we're actually able to get that kind of investment, and it will bolster up our solar sector, the only issue, and I hope that actually works with battery capacity as well, but the only issue that we're still facing is we have a fast growing family sector, which is creating more and more households. Now, remember, we still have about 50,000 households coming onto the market every single year. And that's adding about 50 megawatts to 100 megawatts worth of demand that's coming onto the market. So that's requesting basically another what's it, 120 megawatts, almost 200 megawatts that's coming onto the market and demanding that. Okay, so that's a big bold step that we're facing here as a country, trying to now deal with what the impacts of that are. And we can get people to invest and expand our grid, but we need to also change the nature of our off the grid solutions to complement that increased capacity, to make sure that it's not going to be short lived, but it is sustainable. And this is why I said getting households to change their energy mix, which we've already done in the LPG sector, where we've seen a lot more families utilizing gas and we've seen a lot more people pushing towards it. It may be a good idea to try and get some of this quote unquote investment, or trying to get some government expenditure towards incentives to people to be able to do that. Incentive packages would actually help support that kind of investment in solar, that kind of investment in alternative energy to improve. And also, now, how do we create Malasha alternatives? Go to Ghana, where they've actually started to create, where they're starting to use sewage waste, and also in Kenya, where they're also using sewage waste to create an alternative biological charcoal that people can use instead of chopping down trees. So these are the alternatives that we need to use. And even in Ghana, I think they were interviewing one of the ladies around it who was saying, look, it burns faster. Okay, it actually burns faster, and they were making it cheaper, and that's what we call a lot of the relevant. And I saw a lot of the relevant technology, and I saw the ingredients that they were using for it. This is sewage that was burnt, and then they added cassava to it as a binding agent to create charcoal. That's exactly the stuff we have. We're trying to grow our cassava industry and to get more people to start growing cassava, so that especially in areas where there's now more farming opportunities, that can now lead into the direct supply chain of energy. So just taking that formula that is happening in Ghana and bringing it to Zambia, you actually also help the agricultural sector have a domestic off-taker for the cassava output. So that's also very important for our country. As much as we're trying to use cassava to try and go into the oil supply chain to create ethanol, just cassava itself, cassava powder, can also be used in the creation in the energy process, in order as a binding agent for biological charcoal. So we need to take a look at that. This was something, as I said, that's being done in Kenya, and that's also has been practiced in Ghana, and it's something that is being done at local entrepreneurship level. So this is something that can be worked on. Should our sewage companies work on this? And then this also, by the way, if you start to look at that as an opportunity to make an investment in the country, it also gives rise to a reason why we need to have our drainages worked on. We need to make sure that our sewage systems and drainages are actually going to be operating properly, because then sewage waste will actually be leading towards charcoal production, which will actually be leading towards tree cutting reduction. So if you can create that perfect loop, because the more charcoal people use, the more food they're going to eat, the more they're going to produce waste, and again and again and again, that cycle is going to work out. So I think we need to pay attention to how we're actually going to try and improve this situation, especially as a country, because this actually is an opportunity if we think holistically about how to change the consumption of energy in this country. But I think we're looking at everything a bit too one-dimensionally. But it's not a bad thing that we've gotten $2 billion worth of solar investment, and I hope it is able to materialize. It's just that there's a lot more faster interventions which we can do along the way with domestic capital that we should be engaging in and encouraging as a country. I don't know why companies like Lusaka Water are literally sitting on their haunches when they're sitting on a gold mine where they can start becoming the number one Malasha producer, and they can also now start working with companies. And not just Lusaka Water and Energy. You're looking at whether it's Copperbelt or Kitwe, wherever it is, you just need to start getting a lot more of sewage companies to now start producing charcoal with their waste, or at least get entrepreneurs to start acquiring that waste to be able to produce charcoal with it, sell it as biological charcoal back onto the market. And what you'll then have is that off taker for cassava. And then you'll also have an incentive for these sewage companies to start building out drainages, keeping those drainages clean, making sure those drainages are working. And then we're able to fend off things like cholera, by the way, because we can get better drainages. Now, I know that that's still in the Eastern Province, but it should be quite a lot of places. It is something that has a potential to now start going into a lot more places in Zambia, mainly because of how much flooding we're getting and how poorly we manage drainage and how there is almost no sewage around. So that's just one of my takes on that story that we got. Now, other stories that we are actually seeing is obviously the cleaning of the Tazama pipe is something that is trying to be fast tracked alongside the blending. So this is according to our Minister of Energy, who's actually trying to talk about is see what we can do to bring down that potential rate or the potential of bringing up fuel rates. Now, this month, I think there's nothing we can do about it, but they're probably trying to see if in the next 3 months, because at the rate things are going, oil is probably going to get to 30 kwacha at the pump if we continue at this rate, where the FX rate keeps deteriorating and forcing the rate to move up by almost 3% every single month. That kind of weakness in the market is going to be quite hurtful, because you're seeing the dollar moving up about 4 or 5% every single month, the way things are going, and that'll keep reflecting in the upwards pressure of the oil prices. And this is before we even talk about global oil price push. So there needs to be a fast tracking of these things of blending oil. Now that's a good opportunity for stocks like Zambia Sugar. That's a good announcement. Remember, because they're going to be one of the biggest ethanol providers with molasses. Okay, so molasses is going to be obviously one of the biggest things, and that's the output of their production, their energy production. And they're thinking to try and get into about 10% of the oil production supply chain. They were talking about that in 2013. So if you're using the same kind of statistics, if they can provide for 10% of the oil value chain, and that's revenue for them based on ethanol sales, then that's a potential to see about 60 to probably $100 million worth of new sales for them. And as a company, that's actually quite big for them. That's another billion kwacha, and that can actually rival what they're making in terms of sugar. So that's a huge profit plus area for them, using a byproduct that they're already producing. So there's no need to acquire molasses for them. Obviously, they're going to be in competition with Sunbird Energy, I think, which is going to try and push through cassava. So these are various investments that are being done to try and help see if we can bring the oil supply chain a bit more domestic by blending with ethanol. But let's see, because this has been a promise that's been sitting since the president's parliamentary address last year and still hasn't borne fruit this year so far. Other news that we're seeing quite a big standoff, which is affecting our FX rate. Now, we're talking about trying to rein in our FX rate. One of the big things that's affecting our FX rate is the poison that is happening in terms of the debt negotiations. So the first part that's affecting FX rate is poor mining output, and poor mining output has led to less US dollar tax inflow from the mining sector. And we saw it last time when I gave you the MPR read, which showed that the mining sector is on a downward slump, especially since the second quarter of this year. We've seen the mining sector on a huge downward slump in terms of taxes that they're able to remit. And that's mainly because of poor output, a slowed down China, and also weaker prices from Federal Reserve rate hikes, which pushed down the copper prices, or which were heading towards 7,000 at one point. But now they've been buoyed up to 9,136. So will we start to see mining companies start to remit better taxes? We're waiting to see, because that's the weakness of that equation. While on the other side, we're seeing higher pharmaceutical import costs. We're seeing higher fuel and fertilizer costs. Remember, fertilizer is a big thing. We actually saw an article recently on Bloomberg that countries like Malawi are on the verge of a hunger crisis, mainly because of high fertilizer costs. And a lot of that is being driven by what's happening in Eastern Europe, a lot of the embargoes from Belarus, a lot of the problems coming out of Ukraine and Russia. So those dislocations in the fertilizer supply chain are actually causing fertilizer prices to continue rising, which is now going to start affecting food prices. So that's our big inflation coming in. But the big story coming out of the debt negotiations is that China is demanding multilateral banks such as the IMF and such as the World Bank to also take a haircut on the principles of any money that they've lent to countries like Zambia. However, co-investors in that situation are busy saying, we're not going to accept that. That's a non-starter for us. So that is a big problem in the middle of our debt negotiations, which will actually probably cause stagnation. So again, we've got this imbalance in our FX rate from the current trade situation. But on top of that, we've also got weakness coming out. We've also got continuous weaknesses as this drags on. So as China and America and the rest of the world battle over who's going to get a haircut and who isn't, two of the conversations that we're dealing with is offshore owners of local bonds, not local owners of GRZ bonds. Offshore owners. In other words, offshore institutional, multinational banks who own government bonds. For example, JP Morgan, Chase, JP Morgan Chase, that's a mistake. But for example, JP Morgan, if Bank of America has some of our bonds, any of the major traders out there, Aberdeen Investments, which owns quite a lot of government securities and Zambian Euro bonds, those companies, if they are the ones who are coming into our country and holding our government bonds, they are being asked to potentially take a haircut, not you, the average person who's trying to hold their retirement in government bonds. You are not being asked to take a haircut. Okay, so the haircut conversation is becoming pretty sticky because China is asking, saying, but what about these people who own domestic government bonds? And China is also pointing the finger and saying, why is the World Bank exempt when we also have to take a haircut? If you want us as China to take our $7 billion of debt and then cut it down by 35%, then you're asking for quite a bit. If the World Bank, who's also owed quite a bit, or the IMF, who's also owed quite a bit, also don't take a haircut on their debt. So these are questions that are being raised to China by China, which are leading to the conversations becoming more and more sticky. And this is actually quite difficult for them. Now, other things that we have seen also that's coming into the copper news, global copper news, we're seeing that Rio Tinto had to slash its profits this year, mainly due to slower demand from China. So they had to slash their profits because there was slower demand from China. There was slower demand from China. Therefore, they had to slash their dividend. So their profits sunk and their dividends had to get slashed. So this is a signal of a weaker mining sector, but they did say that they are optimistic about China coming back on the market. Now, this is going to speak very well to even our copper output around the world. Now, some of the things that have been actually of concern to the growth of the copper sector is one, very few of the major companies have actually got any big investment projects actually happening, and they're looking towards acquisitions. I think we've recently seen BHP acquire OZ Minerals for about $6.5 billion. So they're looking to grow through acquisitions rather than setting up new projects. Now, that's decent because that means that there's not much growth in supply. So for the future, we'll probably see prices coming up a little bit. And it seems that the electric car sector is still holding up the copper sector very strong, because at a time where you've actually seen quite a loss of speed from companies, from minerals such as oil, you would have seen an even worse reaction when it comes to copper. But still, copper is still holding strong because you've got an EV sector that still needs to continuously buy copper. And you also see environmental lobbying that's coming in to actually prevent quite a bit of expansion in the mining sector. In most cases. So there's a lot of more environmental scrutiny. I mean, we can even bring it home to South Luangwa, where the debates have actually been coming up as to whether people should be mining in the middle of a game reserve. The battle over whether jobs versus the environment is a big thing. And I always tell people that battle is a hard one because people's work is difficult. People need to make a livelihood. It's very easy to sit on your high horse saying no. You've got to protect the environment. But when somebody is on the verge of starvation, or they've got nowhere else to make a living, and the only thing they can do is go into a game reserve and start picking out minerals if they have to, and maybe even trying to push for a company out there to start start digging and yanking out minerals so that they can have a living, it's going to be a tough conversation. The best thing you can do to any country to try and get them to get on board with the environmental argument is to get people rich, because once people get to a certain level of wealth, they start to consider how important the environment is. So you want to be very careful about always assuming that it's just an easy game for us, because the biggest threat The biggest threat to the rest of the world is environmental, but the biggest threat to the Zambian is economic. So it appears we're not reading on the same page yet. So until you diffuse the average Zambian's economic and governance issues, they're not really going to care as much for the environment, because they're trying to make sure. And you want to know the best argument for that? It's the Malasha industry. Okay, in as much as you can tell people stop chopping down trees, how do people who need to cook at night if you haven't given them the income to be able to afford things like gas, to be able to afford the alternatives? That's why I've talked about biological Malasha. If we can try and see if we can come up with it. So those are some of the main stories. But then looking at the premium outlook of yesterday, we did see that there was inflation reads. Sorry, if we're looking at 2022, 22 February information, we did see that there was slowdowns in terms of PMIs around the world. Manufacturing PMIs were relatively weak, while the auto sector, in other words, the car sector of the UK, was up 2.7% on the month. Italy, it was up 22%, but in Germany, it was down 43%. So we're seeing mixed reads coming out of the car sector, and we're seeing PMIs across all Germany, EU, UK, and the USA all had very weak manufacturing numbers, while their service industries were actually doing very well. So service sector around the world, including China, by the way, seems to be the strong improving factor. We did see also yesterday that mortgage data. Now, yesterday we saw mortgage data up 6.2%, and we also saw inflation from Germany, Italy also moving upwards. Now we're seeing quite a strong resurgence of inflation. South Korean PPIs did sink to the lowest of for 2 years, while we did see U.S. home sales down by 0.76%, and as I said, mortgages up 6.62%. So in terms of the four horsemen, here's what we're seeing. We're seeing inflation is still elevated and sticky in the global environment. We're seeing interest rates are starting to pick up again. We're seeing industrial slowdown in that manufacturing data is weak. Plus, we're also seeing manufacturing data from yesterday is weak. Plus, we're also seeing home sales also down as well, while growth is still sensitive. So out here, we should be looking at, it's tough to still get people in, and it's tough to still get stuff out. We've got a weak environment where industrial growth is still weak. So that's also going to stick to poor copper production. And that's the data that we look at mainly around the economy. So we're still seeing opportunities, but the main thing is that the first quadrant of your portfolio, which is your stagflation assets, they are still your number one, but also your wealth insurance assets. Don't stock up on wealth insurance assets. That's very dangerous because those are highly volatile assets. But have them at least up to that 5 to 10% of your portfolio. It's a good idea because whenever things are this bad. Now, when the economy improves, those things are going to get whacked badly. Okay, when the economy resurges, those things are going to get whacked badly, and you'll see that they'll underperform. If the kwacha gets strong, those assets will underperform. If crypto assets go into a sell-off like last time, those assets will underperform. So don't bet the farm on those things. They are unpredictable, but they are often the things that move against a broad market slowdown or broad market downturn. And currently, we're having a slow broad market growth. It's only 0.46% on the secondary market for bonds, while we still have, and we have inflation expectations of about 11% on the year. So we've got a bond index that's not performing as best as it can. And then in US dollars, it's not doing all too hot as well. Now, our big discussion for today, being it Enterprise Thursday, has to do with an announcement that's come out of Zambia Revenue Authority. And the Zambia Revenue Authority yesterday issued out guidelines on an announcement of guidelines on the new gig worker tax. And if you pay attention to an announcement that was made during the budget speech, we did see that gig workers were given about were given a turnover tax rate, and gig workers being digital economy workers. Okay, so if I go through some of this data, the statement that was issued, as an independent freelance contractor working as a content developer, online marketer, or online trader / operating in the gig economy, you are required to register for turnover tax, file returns, and pay them every 14th of every month. In other words, whatever money you make, you have to only pay 4% of it should you make less than 800,000 kwacha in terms of all the gigs that you have. And if we're looking at that in dollars, we're looking at any gig worker who is anybody who's earning probably less than $44,000 a year, somewhere around that benchmark. Somebody who's earning less than $44,000 a year running gigs for themselves. And if you translate that per month, we're looking at just somewhere around 3.75 $3,750,000 a month. And if you translate that into kwacha, people, that's a person earning 60,000 from doing online gigs. Now, probably some people who are doing things like coding and development can probably do that, but most gig workers probably are not. I mean, content creators are not that level yet where they're making 60,000 plus on the market. So probably this will capture quite a lot. Now, we do have a growing number of gig workers in the economy. And I'm going to give you a presentation that we looked at called the gig worker landscape, which looked specifically at the problem of payments and why this tax came into fold. Because I will let out the cat out the bag that I was actually part of the people who've actually been advocating for this change to try and see if we can improve payments. And yes, it's resulted in a tax, but we did survey the gig workers for this, just so that everyone can understand. This wasn't done without consultation of gig workers themselves. And here's some of the things that we discovered when it comes to this. So this is our presentation on the landscape of gig workers and the payments system. So this is what we call a gig worker landscape. So we did this last year, and it was actually presented to as many of the parties as possible to try and see what can be done. So if you're trying to ask what can come out of shows like Behind the Markets, these are the things that we actually talk about. Now, what we did discover when it comes to gig workers in Zambia is one of the core problems that was being faced was that there are two main payment gateways out there, being Stripe and PayPal, but they both only operate partially in Zambia, and they don't allow for the free flow of merchant and personal payments out of Zambia, and have a burdensome limitation on payments into Zambia. In other words, people are not able to get direct payments out of those ones. And those are the main payment solutions that are operated on in the global economy. Now, I want to quickly define who is a gig worker, but I'll bring that to you right now. Now, there has been some persistent problem for global gig workers and freelancers in Zambia. So a global gig worker is anybody who works online, but they don't have a full-time job. So does a person do social media management in the gig economy? Does a person code? Does a person do logo design for companies outside who decide this? And the reason why they hire people from countries like Zambia is really just because they want cheaper wages, they want cheaper labor, and it is cheaper, especially when our economy has got a weaker currency. When the currency gets weak, the average Zambian who will be saying, "Look, I just want to earn 10,000 kwacha." If the currency is sitting at 15, that's about $600. But if the currency is sitting at 20, that's $500. That's $100 reduction in the cost for a gig worker. So you can see that for an outsider, this is where they're starting to see changes in costs for people and where the weakness of our currency starts to play in. So these are the people who can actually bring in dollars. Whenever the currency is weak, you often see Zambians abroad remitting money for property projects, but also gig workers now, especially with the rise of the internet and the rise of MiFi devices and 4G and going into 5G, we're actually seeing battles now of companies trying to offer much better solutions. That's giving opportunities for a lot more people to work online in this country. And what you're trying to do is you're trying to capture the young Zambian. Okay, you're really trying to capture the young Zambian who's trying to work online. And here's some of the information you should take a look at. If you look at the 2021 labor force survey, what we did discover was about 84% of young self-employed people were actually working in the service sector, where the gig economy can easily be captured. And also because a lot of services are now shifting through what we call the 3D movement. They're moving away from centralized work to what we call decentralized work. We're seeing a lot of decentralized work occurring in the global economy, and people are also trying to now see if they can pass out their work out there. So before, cheap labor was mainly obtained in the manufacturing mineral sector, okay? The primary and secondary sector. That was the pursuit of cheap labor. So you'd often find that mining companies and manufacturing companies would go out into other countries. But actually what's starting to happen is that service companies are now starting to go out into other countries. And the first test of that was when India started to offshore its call centers, or sorry, when America offshored its call centers into India because they were looking for cheap labor. So the cheap labor with weak FX rates can actually work in the favor of Zambians. But we have to structure it so that one, Zambians have got good internet to work, and two, they've got seamless payment gateways that they don't have to outprice themselves in order to make a decent living. So there has been a persistent problem with global gig workers in Zambia who want to use popular sites like Fiverr, YouTube, Upworks, eBay, Amazon, and Freelancer, and others, but they've got a barrier to inefficiencies in the payments to the system. So the two payments gateways have cited restrictions and licensing requirements on such as on business on such business by the regulator, being the Bank of Zambia, which limits their desire and ability to set up merchant accounts in Zambia so that people can receive from your PayPal account straight into maybe your mobile wallet. So that interconnection. Now that framework is there. We actually do have that system infrastructure where you can, if you're using the national switch of the country, if you can connect these payments directly to that national switch, this is the same infrastructure that allows for mobile money payments to move to a bank account and back from a bank account, all those push payments. This is the same connection pipe that can be laid. So this is why it was important to ask the question, if it is a revenue line for the government, then we can start to incentivize. That's an incentive for the government to fix the payment barriers so that people working in that industry can actually receive payments easier. Now, currently, a person trying to receive payments is having to loop it around multiple ways. And also, sometimes they just leave the money out there. So those are dollars that should be coming to Zambia that are not sitting in Zambia. They're struggling to sit in Zambia. And as a result, we're losing out on dollars and we're losing out on income that can be spent and utilized in our country because of inefficiencies in the payment system for a growing part of not only the Zambian, but a growing part of the global economy. A lot of activity is happening. And this is how you deal with the slowness of being able to build enough businesses to hire your young people, especially your tech savvy ones. And yes, this one deals with the tech savvy ones. So this is the core problem that drove us to actually do this research. Now, obviously, this stems from an old post I did. This was back in 2021. And you could see that it was hugely reacted to because the people were affected. Okay, they were highly affected. Thousands of people reacted to it. And there was a change.org survey, about 5,700 Zambians, if not even more by now, who had expressed concern about the inability to withdraw money from their PayPal accounts directly to their bank accounts. So this is one of the biggest concerns of the gig economy, is that we cannot receive effective payments. And this is a rising thing. So how many people are potentially participating or able to participate? So we looked at what's called the total addressable market of people in the gig economy. And this is what ZRA is trying to do. If it becomes a revenue line for Zambia, it becomes an easier conversation for the revenue authority. So the trade-off was give them the lowest possible tax, which is the turnover tax, so that it does become a revenue line, and then allocate resources to fixing the problem. So this is the trade-off that we have to be working on as a country, and it will actually benefit quite a number of people. We did a quick assessment of who are the most likely people who are participating in the gig economy in Zambia. And the largest component the largest component of participants in the global freelance market in Zambia are young, tertiary educated, urban, own account service workers. Now, 84% of urban self-employed people are own account. And this is as of the 2020 Labor Force Survey. We found that there were 940,000 estimated young urban workers in Zambia. And 35% of the people employed in urban Zambia are own account workers. 70% of the urban own account workers are in the service sector. That number is now 84% actually. And 15% of young Zambians are tertiary educated. So when we worked out those parameters, we estimated that based on the demographics, the total addressable market for the Zambia online freelancers market is about 34,000, if not heading towards 40 to 50,000 people now. And with the average gig worker earning about $270, this is based on a survey that we did. We actually ran a survey of gig workers in Zambia and found that the average one is actually earning about $270 a month. According to that, that is $112 million of annual earnings capacity that should be coming, with an estimated multiplier effect of adding to the GDP close to about $1 billion, or about 950 million, because once they receive that money, they spend it in the economy, and it now grows into about $950 million with an 8.5 GDP multiplier. So if you look at all this, the impact to our economy of just getting these 40, 50,000 people, a more efficient payment model, and that will actually attract more Zambians who are sitting there on phones and computers and all these things, who are unemployed, to start YouTube shows. And because they'll be able to pay from YouTube to start doing a lot of things, because they'll be able to make payments. That is what we're supposed to be trying to look for. So that is what this first sign is showing us. Now, if you take a look at the what is this problem? What's the opportunity to fix this? So how long have gig workers been doing this? Is the first answer we'll see, is that 48% of gig workers have been actually in the gig economy for a year or less, and 43% of them have been doing it for less than 43% of them have been doing it for less than 5 years. The other 43%, there are only a few of them who have been doing it for more than 5 years. So the data shows that a lot of this are new emerging gig workers. Now remember, internet has become cheap. Mobile smartphones have picked up. And now we have seen that the global freelance industry is growing at 15% compound year on year. So companies out there, opportunities for individual work, driven by firms such as Upworks, Fiverr, who are growing at 15% to 23% year on year, respectively. So there are projections that this market for globally is growing 15%. So if you have a job market that is slow growing, and you've got this market that is growing at 15% in terms of users, the best way to start working out how to get our young people who have access to technology, or maybe can now spend about 2,000 kwacha getting access to a laptop, can actually now enter the global economy. This is where coding camps and all sorts of things become very important. Digital content creation, YouTuber camps, all sorts of things become much more important. Social media management. Training in those skills can actually get a lot more younger people, so that we're no longer just cracking jokes on social media. We're actually making money on social media, tapping into live selling, tapping into all sorts of activities on the global economy. Now, the preferred platforms, and this is part of our survey of Zambian gig workers, we found that Fiverr was 39% of the gig workers, what they wanted to use. YouTube was 33%, Upworks was 31%, eBay was 23%, Amazon 21%, and Freelancer 18%. Now, I want you to just get this into your mind. A lot of this also comes from the fact that Zambians have gotten used to the fact of using digital platforms to work on their own. Now, take a look at the two taxi apps, or the three main ones. Now, you've actually seen a lot of the taxi drivers are now used to the idea of utilizing an application to make a living. So you can see this is becoming much more comfortable in society. So this is where the story behind this gig worker tax is coming from. You can see that there's a change, there's a transformation in society starting to take place. So the preferred freelancer payment gateways that people want to use, 95% of Zambians want to use PayPal, because that's what they're interacting with a lot. While about 21% want to use Payoneer, which is already available to Zambians, and 18% want to use Stripe. So the main issue is PayPal, trying to get PayPal connected to Zambia. And that is where, as I said, trying to turn it into a state revenue line incentivizes the government to then direct resources towards this. Now, where are the problems that we're facing? If we're looking at this opportunity, 15% of household computers, 15% of Zambians have got household computers. This is up 9%. So because of the rise of the laptop and cheaper laptops, we're seeing that there is a growth, and also some of these programs to give laptops to students so that they can get started with a laptop in society. You're seeing 15% growth in the average, the average computer usage. 58% of computer ownership is between Copperbelt and Lusaka. So that's where a lot of the urban activity is going to be. 20% of Zambians 15 to 30 years are computer literate. That is something that we need to improve drastically if we're going to start trying to get into the gig economy, because we're competing with the whole world who are much better at coding, programming, social media management. We are really going to have to get up our game in this area. 75% of smartphone users are below 35 years old. So it does appear to see that the comfort with technology is actually leading towards a younger population. 55% of the population above 15 years have a smartphone, and 70% of mobile wallets are owned by young Zambians. 70% of mobile wallets are owned by young Zambians. So you can already see where this is leaning towards. They're getting more and more access to laptops. They are, especially the urban younger ones. Computer literacy levels are still of concern, but they are big. They are good with smartphones, and they do all have the majority of mobile wallets are owned by this population. So what is the social cost that we had of not fixing this problem, not addressing this gig worker problem? Well, here's what was happening. 50% need of freelancing to combat 50% plus need of freelancing to combat persistent unemployment and economic challenges. So this is a real issue. 60% of freelancers are sourcing gigs from freelance platforms that use only PayPal and Stripe. So there's a lot of problems. They have to start moving money through various accounts, which is creating huge transaction costs for them and pricing them out of the market, or creating some abnormal costs that are thinning any of their earnings. And a little bit of the money is now ending up in Zambia. 55% of freelancers have personally experienced failed to receive payment. Have personally experienced failure to receive or withdraw payments. Okay, 51% of freelancers have money currently stuck outside of Zambia, and 72% of freelancers have failed to participate in platforms because of payment problems. So you can see where this problem is coming from. And now, if you're looking at the social impact of this, youth unemployment has risen in Zambia, as we've seen a lot more people who are called discouraged workers. We've reached almost 1 million, and 66% of the population below 30 are now discouraged workers who are exiting. And these are people who should be going into the gig economy. Zambia needs more taxes, and 85% of gig workers are actually comfortable paying turnover tax. If it's connected through the national switch, it's actually something that's easy. You don't have to manage your taxes. It can be something that is withheld through those PayPal platforms. And the FX deficiency, which we're currently struggling with, shows that we need to be able to build our opportunities and then leverage off the skills. So we're always trying to export food. We're always trying to export copper. We can actually start learning how to export skills in this country. Now, if you're looking also at the global payment network, which taps into all of this, 50% of global payments are done through PayPal, 16% through Stripe, and then you got Shopify Pay, Amazon Pay, and then some of the smaller ones. So already 66% of global payments are processed through PayPal and Stripe. So this is what we're trying to combat, trying to give access to PayPal. But the problem is getting PayPal to connect directly with a mobile wallet so that it's a frictionless payment. It's a singular frictionless payment that can get to the global gig worker operating in Zambia. That is where the big thing is. So if you want to try and improve their capacity, take a look at this chart. It actually helps you see this. And then, and additionally, if you start looking at the costs of having to move money outside of this, take a look at some of your options here. 60% of Zambian freelancers use platforms to source freelance gigs, and none of these options are universally accepted by freelance platforms. While Zoom requires that you send money to a non-Zambian PayPal account, then you can send it to a mobile money account. So you can see the issues here. Now, if you look at the costs here, you've got Western Union, Zoom, and Payoneer. Now, Payoneer only works on Fiverr, charges 1% to 3%, and it does not connect directly with mobile. It only connects with bank accounts. Remember that the majority of people in Zambia have got mobile wallets and not got bank accounts, and only the young people lean a lot to mobile wallets. XCOM, which is Zoom mobile, which is connected to PayPal, which was created for India, is not connected to any of the freelance platforms. It's not connected to bank accounts, connected directly to mobile wallets, but it charges 99 cents to $4 and also discounts the FX rate heavily. So it does charge them, unfortunately, quite strongly there. Western Union, no connection to anything, and it's 6% plus a discounted FX rate. Now you're asking someone to first withdraw the money, then send the money to you on Western Union, creating friction of payments for Zambians, and therefore we start to lose out on payments. So what we're trying to do as a country is to see whether utilizing now the fact that this is now a government revenue line, now to advocate for investment in a change in this so that we can get PayPal to connect through the national switch and then be able to onboard a lot of mobile wallets directly so that gig workers who are operating, whether on Payoneer, whether on Upworks, whether on Fiverr, wherever they are, they can connect directly and start to receive payments in a more frictionless manner directly, even into the option of a payment of a even into the option of their wallet. Now, we did also ask the same gig workers what was the issue, because this is the opportunity to be resolved. What would you like to see resolved in the payment gateway to Zambia? And these are the top three problems we found. We found that direct connection to mobile wallets was number one. Okay, and that was 33% of gig workers wanted to see that. Direct connection to bank accounts, and that was 29.6% of gig workers. So you can see over half of them want to see direct payment to an account or to a mobile wallet without any intermediaries consuming parts of the transaction, and accessing more freelance opportunities. That was 20.4, and a lot of that is driven by inability to access these payment options. We've also seen that 72% of gig workers prefer their payments to go to mobile and bank transfer. So you can see that 43% would like to see payments be able to go directly to mobile accounts, while we are seeing that about 28.8% would like to see it go to bank accounts, while the others are a little bit indifferent. But you are seeing that mobile is the main one. And they're saying the solution to directly connect to is that they get their gigs from is social media. Social media, they get about they get close to about 75% of it directly to the solution must connect directly to payment gateways to accommodate social media gig sourcing, and also payments directly from platforms. So platforms, about 59% of them will be getting their gigs from there, while 75%. So these are the changes that need to be done to make this gig worker tax relevant to society. So this has been the big story about the big change in the gig economy and the conversation that we have seen being had about it. And this is where this tax is coming from. So the tax is basically is the first step to trying to get the payments ecosystem for Zambian gig workers to be improved, so that the digital economy, the global digital economy, can start to accommodate more Zambians to work around, especially in a time where the pandemic has dropped a lot of people, and especially with global service sectors growing in developed countries that need access to cheaper workers. And we need to be able to export our skills to be able to earn more dollars, while also being able to employ more young people and giving them the opportunities. And remember that a lot more of the opportunities out there in the global economy are going to operate in the gig economy. You are more likely to start being able to produce your own show on YouTube, needing to be paid from YouTube, as opposed to looking for a job in a media enterprise. You're more likely to become an independent content creator. You're more likely to become a social media manager for global brands out there. You're more likely to become a programmer if you learn that skill for global brands, for global projects. You are more likely to get that as a younger person, especially with the fact the gig economy is growing 15%. How to get Zambians to participate in that, make sure as much of the dollars get here, make sure we're not losing out on these projects, and making sure that we're able to participate in it. That is the future of enterprise in this country. Self-employment through the gig economy. That's the future of what we're dealing with. And it's going to allow for a lot more young people to become professionals in those fields in that area. So with that, thank you very much for joining me today on Behind the Markets. I hope that's been useful to us. And we know the next steps is, now that ZRA is requesting us to sign up for it, then we can start talking about, now, how do we get the payment gateways? If you want us to sign up for it, and if you want to be able to collect your 4% withholding tax, your 4% turnover tax from us, and we can now maybe turn that into slightly withheld through the national switch. If you want to effectively do that, can we as a nation invest in bringing PayPal to the table with our national switch, so that we can connect our people to it and make a lot more money from our YouTube channels, from our business, from our online business, from all sorts of things, so that we can become acceptable and do trading much easier. So with that, thank you very much. Have a wonderful day, and God bless.